The more money you make, the higher your tax bracket goes. So ordinary income, which we consider active portfolio and passive income, is going to be taxed at the progressive tax rates. So bummer. However, there are, capital gains. Capital gains and losses can be taxed slightly differently. Now, a capital gain is going to be money that you make above what you purchase for the asset. A capital loss is if you sell the asset at a loss. You buy it for $10,000, sell it for $7,000, you have a $3,000 capital loss. Now, this capital gain, what's nice about the capital gain, if it's a long-term capital gain, that's going to have benefits. Anything held less than a year is going to be you're going to be subject to your ordinary tax brackets. But if you hold it for greater than a year, you may be in a different, depending on your overall income, you'll pay less on these capital assets if you hold them over a year. So if you're in a very high, say you're in the 33% tax bracket, any capital assets that you hold for more than a year, you may only have to pay 20%, not 33% on those capital assets. And if you're in a lower tax bracket, it may go down to 15% or zero. So it really depends. The key thing to remember here is if you hold the stock and make capital gain on a stock you've owned for more than a year, then you're always going to be paying a smaller amount of tax on that than what your current tax bracket is. And that's why we want to hold these assets for more than a year. Now, if you have a capital loss, if you lose money in the stock market, you can actually deduct it from your taxes. But only up to $3,000. So if you lose $3,000, you could reduce your taxable income by $3,000 and get a refund from the government. So if you lose $3,000 on a stock, the government may refund up to $900 of that on your taxes. So that helps to mitigate some of your tax losses. If you want to pay no taxes, you can get some tax deferred accounts, such as a 401k plan, which means you can put income into this 401k and pay no taxes on the income. There are self-employed IRAs and there are also regular IRAs. So if you are not working or working for a company that does not provide a 401k plan or working for a company and making less than $35,000, you can qualify to put some money in an IRA, which is an individual retirement account, which can reduce your overall tax exposure and limit you from paying any taxes on those stocks until you eventually sell them. Now, if we talk about an investor life cycle, different age brackets have different demands on their investment and different advice on where you should invest. So you need to know, are you youth oriented, where you want growth oriented stocks? Are you middle age oriented, where you want a mix of stocks and bonds and safer stocks? Or are you more income oriented, where you're looking for generating income and not really risking your money on capital gains? So in that growth oriented stage, and this is when you're first starting out, you want growth stocks and you want stocks that are going to grow and have a lot of risk, and this is probably going to give you the most potential gain. But as you become more middle age, you're going to think about less riskier stocks and preserving your capital and increasing some of your income and maybe some of your bond exposure. And as you hit the retirement stage, you want to be in a highly conservative investment portfolio that's going to produce a lot of supplemental income for your retirement. So in the growth stage, you'll be looking at stocks and options and futures. In the middle age stage, low risk growth stocks, income stocks, preferred stocks, convertible stocks, and bonds. In the income oriented stage, where you're much older, you're looking at low risk income stocks, mutual funds, government bonds, corporate bonds, and bank certificates of deposits. Now, investments are closely tied to the business cycle of the United States, specifically United States stocks. So if the business cycle is booming, expanding, growing, stocks are going to be doing well. So if our GDP is growing and unemployment rate is declining and disposable income is increasing, stocks will do well. So a strong economy is going to be a reflection of expanding business cycle, and that tends to do well for stocks. Now, if the economy is going to decline or go into a recession, usually stock prices come down first, almost like a warning. And if we're in a downward business cycle, then stock prices are going to move down. So, common sense there. Now, bonds are fixed income securities, so they're affected by the business cycle in a little bit of a different way. They're more tied to interest rates. So, as the business cycle expands and interest rates start to go up due to overheated economy, bonds will decrease in value. But then, if the economy slows and interest rates begin to drop, the value of bonds will increase. That's why they're sort of opposites of stocks that way, and that's why they're great, to counteract, you know, the stock market losses in the portfolio, because their timing of gains and performance are not always the same as stocks. They're not highly correlated with stocks, so they're good diversification strategy. The short-term investments are good for liquidity. So if you have a bank account or a bank account or marketable securities account, a money market account, they may call it. Those are very short term. You get some interest and you can get access to your stock on a daily basis. So that's one of the advantages of short term is liquidity. Now, so we like the liquidity and the low risk of like a bank account, but there's going to be a very low rate of return and almost no protection from inflation. So let's move to some careers in finance. Yay, finance. So in finance, if you understand finance or investments, you can work in commercial banks that service corporations mostly. You can work in regular banks that service local people's needs of mortgages and savings and things of that nature. You can work in corporate finance, which is working for companies and helping them to understand and analyze their financials. You can be a financial planner, which you help other people to put together an investment plan or a financial plan for their life. You can work insurance, which involves in risk management and asset management. Let's see. Okay. Now, so let's review Chapter 1. And the review here for Chapter 1 is you got the basic idea of investments and their attributes and distinguish one investment from another. We talked about the process and different types of investors, principal types of investments, steps in investing, steps you can take to start investing and investing cycles. We talked about life cycles as related to investments, differences between short and long-term investments, and the role of investments is, particularly in financial careers. So hold on, I'm going to go bring up some more information for careers in just a second. Okay, this is just some supplemental to the chapter, and we're looking at here top skills of financial based that requested by financial positions. So I had done some research and I pulled together a bunch of articles and talked to a number of people and that hire financial analysts and financial types of positions and investment positions, all different finance positions. And I talked to a number of students and I pulled together this information. I put together a top 8 list of top skills requested by finance positions. In large, the number one skill they're looking for if you're going to work in finance is Excel proficiency. Understanding how to use formulas, charts, macros, and formatting in Excel is a huge requested skill of college graduates in getting and maintaining financial positions. Number 2 is teamwork. Are you good with your interpersonal skills, your relationship skills, and working with other people? Number 3 is your communication skills, written, verbal, interpersonal. 4 is your understanding of accounting principles, which they're closely related to finance, banking operations and products, financial markets and products, Bloomberg terminal operations, and strong problem-solving analytical skills. So if you want to get a job in finance and you want to do well in finance, these are the areas that you need to excel in, and you need to sort of have your resume reiterate some of these skills to improve your chances. When I looked at what recruiters are actually asking for, so this is directly what recruiters who recruit financial people, and the first thing they're looking for is, commercial awareness, so business acumen. So this is your understanding of how business, industry, and investments and companies work, and this is what your business degree is trying to give you. So this commercial awareness is why you're going to school as a business person or a business degree, because we're trying to, in all these different courses you're taking, build you up to understand how business works and all different aspects of business. So this is what recruiters, want to see, that when they talk to you, that you understand what business is and how to apply it. And number two, they look for communication. How well, again, you can communicate. And you'll see how this list is similar to my list. Mine was independently put together through different sources specifically for finance related jobs. And this is just business recruiters in general. So your understanding of business is basically number one, communication is number two, and number three, teamwork. Now you're starting to understand why there is so much emphasis in teamwork in a lot of your courses. And the teamwork is basically, you're able to play as a team, work together with others in a cooperative way to get things done and develop relationships with people in the company where they are going to want to work with you and help you. Now, number four here is understanding of Microsoft Office, especially Word and Excel. 5 is problem solving. 6 is leadership. And that's why, a lot of interviews are going to ask, what teamwork experiences do you have and what leadership experiences do you have? So if you're not in a club or a sports team or some sort of extracurricular activity in college, you may not have a lot to talk about as far as teamwork and leadership. So it makes you, you should be involved looking to join clubs or be a leadership position in a club or in a sports team, because it can really help your interview chances. Organization, how well you can prioritize and work efficiently and manage your workload, and how to focus on what gets done and meeting deadlines and communicating your abilities. So organization. Perseverance and motivation. They want employees who don't get fed up quickly, who don't give up, who really can work towards a goal and stick to it. Ability to work under pressure and stress, and confidence. 10 is confidence. That's a lot in the interview. If you can come in confident on the interview, that shows. And they want to hire someone who's confident, who seems like they know what they're doing, who isn't meek and timid, who can really, and people want to work with or be around confident people. So this is what recruiters are looking at. So you may want to think of ways to kind of think about this and how you can get some more of these skills and display them. Now, as far as graduates from our program, I went to LinkedIn, and on my LinkedIn account, these are different jobs that former students who linked up with me on LinkedIn, where they're working after they completed a business degree. And you can see here that there is quite a number of different jobs in the finance area, 126 of them that our students have gotten over time working in finance. So these are just a few of the different jobs that you can possibly get as, when you graduate our business program. And if you have a specialization in finance, these are our college graduate in different financial related areas that they work in. Okay, so that's it for chapter 1, the overview of investments, overview of what recruiters are looking for financial positions and financial jobs and different types of financial jobs available. So I hope you enjoyed this lecture, and I look forward to you listening to chapter 2. Please comment and like this video. Much appreciated. Thank you.